Okay, welcome to Classic Value Investors and Microcap Explosions. This is Mariusz Konieczny, another video in the Why I Hate the Miners video series. I honestly don't remember which video it is. I kind of, you can only count maybe on one hand how many fuck-ups happened, but, I am beyond that number, so I have a hard time. Anyway, let's just say this is another video. In this series, I am featuring SandGold, which was such a popular stock, by the way. And, everybody in the industry, many people in the industry, very, very much like the company for good reasons, right? So what you have in front of you is a SandGold production profile over the years. And this company is located or producing in Canada. So as you can see, in 2006, it had 1,000 ounce production, then kept increasing it like stairs. By 2009, it produced 35,000 ounces. And notice that like here, it shows like from which deposit the production came from. Then another deposit, 007, came online, increased the production to almost 44. Then they achieved operating cash flow in 2011 with 74,000 ounces of production, and in 2012 it reached 86. So as you can see, it was on its way to become a 100-ounce gold producer per year, and then the market cap reached, people made a lot of money, right, on the way up. It reached $1 billion. So let's have a listen to this guy, what he has to say about why he likes SandGold.
Well, tell me about some of the companies that you are willing to speak about, whether it's related to gold or silver that you feel very strongly about.
Okay, one I really like is SandGold. Trades on the Toronto Exchange, SGR. They're about $1 billion market cap. They're trading at $3. There are 300 million shares outstanding. What I really like about it is they recently added new management. Robert Peary, who was a very high-level operations guy at Placer Dome, joined the company, and since he's joined the company, their operations are going swimmingly well. We're seeing them under-promise and outperform. This is a company that is going to spend $25 million this year in exploration and drill 300,000 meters. And Robert Peary told me in an interview I did with him that he expects their resource to go up, their gold resource to go up exponentially is the word he used, and he's a cautious man. So I think that's one that I really favor at this point in time. They're producing, they're cash flow positive, should start to show earnings. They are in the Red Lake district, not far from Goldcorp's Red Lake project. And the Rice Lake project, this is called, is I think one of the most outstanding high-grade gold discoveries in recent times. It's in Manitoba, Canada. It's really one I like a lot.
Okay, now let's have a listen a little bit about the description of the company so you have a better idea.
With the pouring of their first brick of gold, SandGold Corporation out of Bassett, Manitoba, is now one of Canada's newest gold producers.
SandGold is a growth company. It's a growth gold mining and exploration company. The emphasis as far as employment is bringing in the people from the surrounding communities and the local communities, making them part of this, and this makes for a better company. And we aren't high profile yet, but we're growing quite rapidly. Flat management. Very, very skilled management and people, and our whole business model involves the local communities and keeping a loyal, dedicated workforce.
It's been quite a long time coming, but it was well worth the wait. There was a lot of happy people there yesterday, and of course I was one of them, but we were very, very pleased with the number of people that showed up, particularly the number of people from the surrounding communities and the number of shareholders that showed up for our events yesterday. It was very gratifying. Gold was discovered here at Rice Lake, on the shore of Rice Lake, in 1911. And it wasn't until 1932 that the mine actually went into production. And it went into production at a low rate in 1932 and gradually increased up to about 550 tons per day. Very successful mine, the first mine in Manitoba to ever pay a dividend.
We've got 2 existing deposits that we're mining. Within a space of a year, we've found 2 more that we're looking at mining. So it's a real growth story. We're we started at point A just over 2 years ago, basically borrowing a few dollars to make our first option payment, which was a fraction, of course, of the cost of our purchase. And then most people didn't think we could pull this off. So here we are 2 years later with 2 operating mines, mill, 200-person workforce, price of gold that's doubled from what we started at, 2 new deposits that are yet to be developed, aggressive exploration program that we're quite confident will turn up a lot more gold. So it's got all the ingredients. It's got production, it's got blue sky potential, exploration potential, and we've got all the expertise to
I knew that there were old gold mines in the area, and I knew that the pattern of mineralization in the main Rice Lake mine should repeat itself in this area. Once I saw it, it was just too many things started to line up to be coincidence.
The pattern that Ferreira saw resulted in a radical rethink of the way geologists look for gold in Bassett. Since then, this new geological model has resulted in 5 new high-grade near-surface deposits. These discoveries have made SandGold one of Canada's most exciting new gold companies.
The gold is not simply restricted to the old mine unit and the thickest part of the mine unit. These deposits form a pattern, they're not random, and once you understand what the pattern is, you can predict where the next deposits are going to be. If you think of an experiment where you start off with a plastic ball and you put a compression force to it, you deform that into an ellipse. When you pull it out into an ellipse, you form a fracture right in the center. That fracture is your pathway. That's the pathway that the gold traveled down and the excess elements. You can take that pattern and you can extrapolate that pattern back to the east. And lo and behold, when you do that, that's how we found the hinge. It was simply drilling along where the pathway should be, and there it was. We found 007, we found Cohiba, we found L13, and in the future we should be successful in finding more deposits.
On the production front, Hinge and 007 have just started to come online. While development work continues, these high-grade, near-surface deposits are already driving down cash costs.
The main difference between the Hinge and the 007 mines is their access from a portal which originates on surface. And by doing so, we're able to mechanize the operation with modern equipment and larger equipment in some cases, so transportation of ore and waste to surface is accelerated.
At the same time, the network of veins being mined at Hinge and 007 may hold the potential to connect these surface portals to existing workings down deep.
Well, what's exciting about the veins here in Hinge is that we have vertical continuity. So it's not that they pinch and swell and disappear. Generally speaking, we're able to follow the structures. Some of them grade a little higher, some of them less. But by having shaft access to the Rice Lake mine, tunnels here, and eventually these will be connected together, we'll have quite a bit of flexibility in order to optimize the project operation.
With production volumes growing rapidly and exploration continuing to build out the company's blue sky potential, SandGold remains one of Canada's most exciting gold companies.
SandGold is one of the few companies that can discover and develop within a year. We are explorers, we're developers, and we're producers. We have the capital, we have the market conditions and the gold price.
And based on recent drilling results, SandGold may only have just begun to understand unlock the full potential of its emerging geological exploration model.
The deeper we drill in 007, the wider the intersections and the more gold. There's some fabulous intersections at depth in 007. The strike length is getting longer, and it also seems to be mingling with another deposit that we have off further to the east called the Emperor. If you look at the sections, the Emperor in the third dimension is trending right to the 007, and it looks like they intersect at depth. And of course, where structures intersect when you're mining gold is the place to be, because things blow out and the grade goes crazy. So high grade, big widths, that's what we want.
So actually, I didn't get involved in this company when the stock price or the market cap was $1 billion. I didn't do that. I was very smart. I only got involved when it was down 98%. Okay, so the stock price went from like $4 per share in December of 2010, and then at the end of June 2013, it was down to 9 cents, which was decrease of 98%. So I jumped on it in November 2013 because I saw Eric Spratt, the genius, and I'm not making fun of him. He's a genius mining investor, right? So if you get involved in companies that Eric Spratt or Rick Rule get involved, then there's absolutely no risk, right? So anyway, Eric Spratt bought like 2.5% of Sen Gold at that time after it declined 98%. So why did it decline 98%? Well, the problem is that the price of gold started to, decline, right? Even though all the governments around the world were printing money, devaluing the currency, gold was supposed to go to 2,000, but it started declining. How can that be? Anyway, started declining so that operating cash flow that the company achieved in 2011 wasn't so. So the company became unprofitable, right? But there was no problem because listen to this piece from the CEO.
So let's talk about, let's say 2014, establishing positive cash flow, profitability is an issue. What are you doing directly to come there?
Yes, a couple of things. One of the big things is that, again, as an exploration company, we've enjoyed using flow-through as a mechanism for raising money, and we've had good success with that. But going forward, I think we need to look really at the exploration that we do needs to be more aimed at improving the quality of the deposit without adding more ounces. So we'll be able to make significant cuts. In fact, on surface, we've now reduced from 6 drills to 1 drill, and that's going to be our runway going forward. I would expect 1 to 2 drills on surface max next year, unless we get onto a discovery that really warrants doing more work. So we'll be quite a bit more frugal with the exploration, and this year that spending is about $16 million. So I would suggest it'll be maybe a quarter of that. We'll still need to drill underground, but again, we're trying to be more strategic. In terms of capital, the lion's share of the money that we needed to spend on 16 and 26 will be done this year. So we're already out to the new structures on what we call the 007, so we're ahead of schedule there.
Good.
And so not a lot of lateral development to be done. We do have to do some connecting of the old and the new mine, but we've really been able to pull back a minimum of 20% from original plans. And going forward, again, we need to get the proper balance between the operating levels and the capital to support it. We're still trying to understand what is really the long-term sustaining costs, but we've been caught in the path with this growth, I would say growth for the sake of growth almost, where you're trying to compete to compete with the competition that might be forecasting 100 and 120 in larger numbers. We think this is a very good mine at 80 to 85,000.
Yeah, why not?
I'm not saying it can't be larger, but we have to walk before we run.
Exactly.
And there's absolutely no reason that we cannot make money, even at this gold price, at this operation. So this is where we have to deliver for our shareholders value, for those shareholders that are with us today. And in the long term, the exploration potential, the potential to increase production is
Maybe
very
dividend
good.
in the long term?
Well,
If all works well?
yeah, a dividend would be a nice thing, but
Exactly.
we still do have some debt,
Yeah.
so I think we have to look at that,
Yeah.
holistically, of course.
course.
But certainly, we have a responsibility to deliver value for our shareholders and be very patient. We're frustrated with the share price. We understand why we're in the box. We are. But we're of the view that we're going to be one of the companies that does survive this.
Yes.
And when we do, we'll be stronger for it.
That's right.
Because some of the cuts we've had to take, they probably were necessary. But from there, it's important then to live within our means. And then from there, we can talk about things like growth. But today, it's really trying to reduce the cash burn, which is our mantra within the company, and we've done good work. We have more work to be done, but certainly I think we're heading in the right direction.
As you can see, the company had plans to make SandGold again a profitable operation. So instead of focusing on just growth at any cost, because they were going to go to production from 100,000 ounces to 150 per year, they said no. We are happy to be a 70, 80,000 ounce producer, but we're going to be profitable. So even though the price of gold wasn't that high at that time, hey, as long as they're profitable and stay in business, that's okay with me, because I know that the price of gold is going to 2,400, 3,000, 4,000, whatever number. Why? Because governments around the world are printing money, because Peter Schiff is telling me that gold is going to 5,000. Eric Sprott is saying that gold is only going to go higher. So it's just a matter of make it profitable to survive, so that when the 2,400 price of gold arrives, this is going to be a huge win. You see, at that time, when it declined 98%, the market cap was like at 50 million, right? So let me show you some calculations. Oh, and by the way, by that time, what you can see here is 400 million, right? So we have a market cap of 50 million, and this is the number, 400 million was spent on this property, right? Because in order to get this kind of increase in production, and also to discover these mines and to develop these mines, and they had like between measured and indicated and inferred, they had like more than 3 million ounces in the ground, right? So in order to develop that kind of number, you need to spend a lot of money. And what you see here is the money that was spent on exploration, purchase of property and equipment, and investment in mineral properties from 2006 to the first half of 2013. There was $400 million spent on this property, and you, at that point, are buying it for only $500 million. What a wonderful deal. So when I ran the numbers after consulting the management, I realized that, hey, if they could produce 80,000 ounces per year, and the price of gold is only $1,300, they can generate income from operations of about $40 million. And then even after spending on general and administrative and interest expense, oh, by the way, they had 50 million in debt, right? Because they had to get the money from somewhere to spend this 400 million. So, but even after that, still cash flow before exploration and capex were going to be $30 million. And remember, market cap is only 50. But as I said before, the idea was not to only become profitable just to be for that reason. The idea was to, hey, become profitable so that you can weather the storm, and then when the price of gold is 2,400, you plug it in to all these numbers that I had before, and you are talking about cash flow after exploration, after capex, after general and administrative of $100 million. So from 50 to, let's say, $1 billion, that's a 20 bagger, right? But we already know that this company was trading at 1 billion when it only had a production of 40,000 ounces per year. Well, now it would have 80,000. The price of gold would be much higher, and if the price of gold is 2,400, you know people are going to be talking about 3, 4, 5,000. So at that point, with this kind of cash flow, yeah, it was gonna, the price was probably gonna reach not just 1 billion, but 3 or maybe even 5. Who knows? So you're looking at 50 million market cap. That could be like a potential 100 bagger. What can you not like about that? So what do you think happened in the end?